Hello, welcome to today's video. Welcome to this tutorial. I'm Leke, and in this tutorial I'll be explaining to you how you can make the most of a trend, how to identify a trend, and how to know if it's a profitable one, and how you can actually enter and exit the trend. Now, basically, it's been a hard time for a lot of traders to recognize profitable trends. You usually hear about trading with a trend, but have you ever heard that not all trends are profitable? So in this video we'll be touching that and how to identify a trend, and how you can actually make sure that the trend is a profitable one. So if you're new to this channel, I want you to subscribe to this channel, because videos like this have been uploaded at least 3 to 4 times a week. And also we have a Telegram channel where you can actually join, and you can get our free strategy on how to trade the volatility indices. So if you have an account maybe in Forex in the past, or stocks, or whichever, and you've actually blown it several times, we have a free strategy that you can actually implement and begin to make money. So for today, what we are discussing is finding and maximizing profitable trends. So now the idea of a trend is actually you having the basic knowledge of an uptrend and a downtrend. Yes, okay. Now if you look at this is the uptrend and this is the downtrend. Now for this uptrend, what you can actually notice is, in an uptrend, this is where the trend started. This is the start of the trend. Then you will notice that when the market goes up a bit, then pulls back. We call these pullbacks, 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 and this also is a pullback. Now pullbacks are characterized with for an uptrend. Now the pullback is characterized by two things. We have the higher high and we have the higher low. Now this is the first low, this is the first high, so you call this, so this is now a higher high, then this is a higher low. Yes, so the same thing here is how you have your higher high and you have your higher low. So when you see a trend this way, it's a confirmation that it's an uptrend. Now for a downtrend, this is where the trend started. Then you can see this is your first lower high, then this is your second lower low. Okay, you can see this is the first pullback from here to here. Then here you have a lower high, that is this high is lower than this high. Then here you have your lower low. Then the same thing here, you have your lower high, then here you have your lower low. Now it's necessary that you seek out this theorem before entering any trade. It's necessary you seek out this theorem before you enter any trade. Why is this? Because there could be discrepancies when trading. The trend is always moving in a zigzag manner. You can basically not be, you might actually think that the market is going upwards. It could look like a choppy market. Okay, you can have something like this. You have something like this. You know, you have something like this. And you could just come this way. This kind of market, it's not a trending market. This is a choppy market, because in this market you basically cannot know where the trend is actually going, whether it's going up or down. You can notice that here you can see a higher low here, then you can see your higher high here, then you can see that this dropped below the higher low, so we now have a new higher low which is different from this. Then you have a new higher low here. This is a higher low, this is a lower low, this is a higher low, this is another higher low, this is another higher low, then you can see a lower low here. So basically, when you see things like this, such trends like this are not healthy. But when you see things like this for an uptrend, it is healthy. Then if you see something like this for a downtrend, it is also healthy. So now let's go to our charts and let's see how we can actually use moving averages to help us make better decisions before entering trades like this. Now, down to my chart here, the first moving average I want you to understand and make use of is the 200 moving average. Now you drag your moving average here. Now my 200 moving average, it could be simple, it could be exponential, whichever, and you can make it any color. I like to use white, then simple close, then that's it. Now why I like this is because the 200 moving average helps you to filter the overall position of the market, or I would say the overall direction of the market, if it's upwards or downwards. Now whenever the market is above your 200 moving average, like here, you're only looking for buy positions. Whenever your market is below your 200 moving average, you're only looking for sell positions. Only sell positions. Now, the reason why a lot of traders lose money and the reason why they fail is because when they're trading, they tend not to focus on the actual direction of the market, which is always good to know that from a higher time frame. Now, if you're trading on a smaller time frame, if you're trading on a very smaller time frame, say 5 minutes or 15 minutes, it's necessary for you to make use of your 200 MA. The 200 MA is your best bet, because your 200 EMA, if you calculate this, your 200 MA, your 200 moving average, means that 200 candles have been calculated and given their average. So that means you're looking at 200 candles of a 5 minute candle. So that means you're looking at 1000 minutes. So for 1000 minutes, that means you're having a movement. You're having a movement being calculated beyond couples of hours. So you're looking at 6 hours and above. So even if you don't look at a lower time frame, you're certain that, okay, by the time the price crosses above 200, I'm certain that, oh, that means there's been a significant move already. It helps to filter. It's a filter that makes analysis easy for you. Now look at this. After on my 5 minutes time frame, you can see that the market has crossed above my 200 EMA, my 200 SMA, sorry. That's a simple moving average. So what do I need to do? The next thing I need to do is to start looking for, since it's an uptrend, I start looking for something like this, which is the higher low, lower low, higher low, lower low. So you can see the market moved this way. The market moved this way, then moved this way, then again moved this way. You can see, then it moved this way again. Yes, so you can see this is the higher high, this is the higher low, this is the higher high, and this is the higher low. At this point, your trend is already confirmed. You can see that you have a confirmation of your trend. Also, you have a double confirmation, like here you can see that you have a double bottom, which is one of the chart patterns also, which I'll be teaching you and explaining to you later on. Now, one of the mistakes that people also make in this movement is that if you're considering an uptrend now, if you want to ascertain that the trend is consistent, that is a profitable trend, this higher low it can drop below this higher low here, but it must not drop below this lower low. That gives you confirmation that once this low is higher than this low, or if this low is on the same plane with this low, your uptrend is still valid. So you can see that here we had a higher low, we had a lower low, then the market still pushed up, then it came back to this same plane, pushed up a bit, came back to this same plane, then pushed up again. Then at this point you can see that the market broke this line here, that's this support here, then continued to the downtrend, then broke the 200 EMA, then retest and continue downwards. So in the downtrend you can see something like this. You can see, then here you have your pullback, then it moved down again, then you have your pullback again. You can see this is your lower low, your lower low, your lower high, then it dropped again, then the same thing went up, then the same thing. You can see this didn't touch here, then came down again. So this is how you can actually confirm your trend. This is how you can actually confirm an LV trend. Now the next thing you need to know is your moving average, is the 50 moving average. You can also add a 50 moving average to help you confirm that things are working effectively. Alright, now this is the 50 moving average. Now you'll notice that once you have a cross of the 50 and the 200, it can serve as a confirmation of a trend. So now in this situation here, all you need to do is to wait for your 50 to cross your 200, and you can start checking for your lower low and your lower high. You can see this situation after it crossed here. You can count this is your high. You can see it dropped. Then right here you can place your entry. You can place your entry right here and you ride this wave. So that's how it works. So it's as easy as that. So now how can you ascertain that okay, that this is going to play out for me? Now I usually like to make use of an indicator that shows me an overbought and an oversold condition. Now for instance, you can see that here, you can see that the market is still in an uptrend because your 50 moving average has not crossed below your 200. So but you notice that the candle is in between your 50 and your 200. So what's the guarantee that this can still push to the upper side? Okay, so you can make use of oscillators that gives you an idea of the momentum of the market. So you can make use of an oscillator like the stochastic. Okay, so the default is actually 533, but I usually like to use 933. Then you click OK. Now with this, you can see the market dropped this low and we are not sure of its movement. So you just wait, then the market dropped again, then you are waiting for what? The confirmation of the trend, which is the higher high, and for the uptrend, which is the higher high and the higher low. So the market went this way and dropped again. So right here you can see that this is a lower, this is a higher low. So right here you can place your entry and you make what you need to make, and it's good. Okay, let's see something similar here. You can see that your market dropped here, dropped this way, dropped here. Then you wait for your stochastics to come to an overbought level, yes, which is up here. Now this is the drop, the pullback. Then you have your pullback here. Then right here you place your entry. Then you can make your money this way, and even this way. So basically the market will definitely show you what you need to know and teach you and tell you its direction. All you need to do is to understand the structure of the market, like I explained to you here, for an uptrend and a buy trend. Yes, once you understand how this works and how this works, all you need to do is to place your filters, which is the moving average, 250. Once those are in place, then once you have your cross to the upside, then you're certain that you're an uptrend. Then all you need to do is to look for the setups. Then once you have your cross to the downside, all you need to do is to look for these down setups. So then for your entries, you can make use of a stochastic so that it can give you, if for a downtrend, it will give you an overbought condition, so that you can buy at the tip or at the beginning, or at the beginning of the trend, the continuation of the trend to the downside. Or if it's a buy, you can buy at the beginning of the trend to the upside. So basically that's how you can actually confirm your trend and know that it's going to be profitable for you before actually risking your capital. So if you actually like this video and you like to share with your friends, please do click the share button and share with your friends, and also subscribe to this channel, and also place a comment in the comment section below. If there's anything you want me to answer, I will be glad and happy to answer you. So I remain your boy Leke, and I'll see you in the next video.